So if you're someone that wants to start stock market investing, but you're not really sure of exactly where to begin, you've clicked on the right video because I'm going to break down these 6 different steps that you need to be aware of as a complete beginner. I'm going to try and make it as detailed but also simplistic as possible so that by the end of this video, you're going to know exactly what you need to do. And just to give you some proof of concept to show you that I'm someone that's worth listening to, I'm just going to jump into a couple of my different investing portfolios. So I'm just going to set up a screen recording and put it on the screen over there. As you can see in one of these portfolios, I've got around £52,000 as a total balance. That's probably around $60,000. And the total amount of profit that I can withdraw right now is around $10,000. This is one of my smaller portfolios, but if I just go over to one of my second ones, as you can see in this one I've been able to build it up to the point where I've got £82,000, which is maybe close to around $95,000. And this one also has a profit of around £11,000. So that's probably going to be around $12,000. And again, these are just 2 of my portfolios. I've got other ones that I'm building up right now as we speak with a lot more money in them. But I'm only showing you that just to give you some proof that I know exactly what I'm talking about. So make sure you stick around for this entire video because there's definitely going to be a lot of information that's going to help you when it comes to starting your stock market investing journey. But let's jump straight into one of the first steps that you need to take, which is that you need to understand what the stock market is. And I know that this might sound quite obvious and you're probably thinking to yourself, Sam, I know exactly what the stock market is. That's the reason why I want to make money with it. Now, the mistake that so many beginners make is that they want to make money with the stock market, but they're not really sure of exactly how it works. And the reason why I know that you're probably making this mistake right now is because this is exactly what I did myself. I always used to see people on various different movies, The Wolf of Wall Street and so many other movies making money with the stock market, and it's something that I wanted to do without really having a complete understanding of the foundations and the mechanisms of the stock market. So I'm just going to quickly explain how it works for those of you out there that want to get a bit of a deeper understanding before we move into the remainder of the steps. So the stock market is a marketplace where investors buy and sell shares of publicly traded companies, and it basically allows normal people like me and you to own shares in trillion, billion, and $1 million companies. So as a stock market investor, every single time that you buy into a particular company, you're owning a small share of that company and you're basically a shareholder. So I'd say that those are the basics that you need to be aware of. Of course, there's some other nuances, there's some other details to it, but as long as you're aware of the fact that the stock market is a way to buy and sell shares of companies, that's a great starting point. But this now brings me on to the second step that you're going to need to take, which is that you need to understand why you should even start investing into the stock market in the first place. Well, there's a couple different things to consider. One of the first things, or the first reasons why it's beneficial to start investing into the stock market is that it's one of the easiest ways for you to earn a passive income. When it comes to the world of investments, there's other options out there. You can invest your money into real estate. You can invest your money into, let's say, cryptocurrency. Those asset classes are definitely not bad at all. But for example, with real estate, it's going to come with you having to put down a big down payment. You're going to have to continuously monitor the property, make sure that it's well maintained. However, when it comes to the stock market, when you put your money in there and you invest correctly, you're going to be able to kind of set it and forget it depending on how you invest, which I'm going to speak about a little bit later on in this video. But when you put your money into a company, let's say like Apple, you're not going to have to go to any board meetings. You're not going to have to come up with any product designs for the new iPhone 20, iPhone 25, whatever it is. You can basically invest your money into all of these different companies. And whenever they make a profit, you're going to be able to see your investment grow with it. But if I just take it back quickly to the initial reason why you even want to invest, the alternative to putting your money into, let's say, the stock market is to leave it in a basic bank account. And if you make that mistake, your money's going to be eaten up by inflation, which means that the same things that you can buy today, you're not going to be able to afford those same things, let's say 5 years from now, 10 years from now. So the main point to investing in the stock market is that it's a great way for you to beat inflation because the stock market on average grows 7 to around 12% per year, of course, depending on how you invest. So as long as you're putting your money into the stock market in a safe way, you can kind of sit back, watch your money grow without you having to monitor things on a day-to-day basis. But just to give you a better idea of exactly what I'm talking about, if I just jump into this investment calculator, it's going to give you another reason why you should invest, because right now you probably don't see the benefits, but when you look 15 years, 20 years into the future, you're going to be able to understand exactly why stock market investing is going to be one of the best options for you. And of course, this isn't financial advice. All I'm doing is sharing what I'm personally doing myself. But let's just jump into this calculator and I'm going to fill out these details. So let's start off with the initial deposit. Let's say you're looking to invest, I don't know, around $10,000 as your initial deposit into the stock market. You're looking to leave it in there for around 20 years. Let's assume that the stock market on average is going to give a return back of around 10%, and you're looking to do a monthly contribution of, let's say, around $500. In 20 years time, your money would have grown to almost $500,000. And this, of course, is an estimation. Nothing is guaranteed. The stock market might do a lot better than 10%, e.g. in the last year, the stock market returned around 20%. So this is, an average amount, but it's just there to give you an idea of the potential of how much you can earn. And of course, the numbers can look a lot better depending on how much you're looking to consistently keep contributing to it. Let's assume that you're looking to contribute around $1,000 into the stock market every month. In 20 years time, that's going to grow to $832,000. And imagine if you've got a decent amount of income coming in and you're looking to contribute around $2,000 every month. In 20 years time, you're going to have around $1.5 million. So I'm sure that you can see the benefit of investing. You're going to be able to grow your money and benefit from the compound interest, all of the profits, the dividends that you're going to be able to earn. But for the most part, I'll definitely say that those are some of the reasons why you should start investing in the first place. But once you've got an understanding of that, the next step is that you need to learn that there's two different ways that you can invest into the stock market. And when I say two ways, I'm talking about two main ways. And this is either buying into individual companies or buying into things called ETFs or index funds. So I used Apple earlier on in this video as an example. And if you wanted to invest into the stock market by buying into companies like Apple, Microsoft, PayPal, whatever company that you want to invest into, you can definitely do that. And that's not a bad way to go. If you're someone that's capable of analyzing the financials of a particular company, and by financials, I'm talking about the balance sheet, the profit and loss statement, cash flow statement. If you know what goes into analyzing all of these different individual companies and you can see different trends, you know how to analyze the news to your advantage when it comes to knowing what companies are going to do well, then that could be a great way for you to start investing. Now, this is not the main way that I invest. The way that I like to do it is by investing into index funds and ETFs. So this is different from buying into individual companies, because when it comes to investing into an index fund, the way that it works is that you're going to be buying into a whole bunch of different companies all at the same time. There's thousands of different index funds, ETFs out there that you can put your money into, but the main one is called the S&P 500. Now, the S&P 500 is made up of the top 500 companies in the United States. So when you buy into it, you're going to own a small share of all of the companies that I mentioned before, Google, Apple, companies like Amazon, Johnson & Johnson's, there's so many different companies. I can't remember all of them right now, but when you buy into an index fund like the S&P 500, it's somewhat of a safe way for you to invest into the stock market, because you're not going to have to monitor the companies. The index fund provider, which is Vanguard, is going to, remove companies that are not doing well, add companies that are doing well. And it's just generally a great way for you to diversify your investment as well, because you're putting your money into all of these different companies, which means that you're spreading your risk. And to give you a visual representation of how the S&P 500 performs, if I just go onto this chart over here, as you guys can see, ever since 2009, the stock market has grown year after year. Of course, there's been various different dips here and there, as you can see, but the S&P 500 has always recovered. And if you put your money into the S&P 500 over the past 10, 15 years, you would have been able to make a profit. And I just generally see the S&P 500 as a great way for you to invest into the stock market over the long term. And bear in mind that this isn't the only index fund out there. We've got other ones like the Total Stock Market Index. We've got other ones that you can invest into where it's not just American-based companies. If you wanted me to make a video going through my top 5 favorite index funds that I'm investing into this year, then put in the comments down below, do the investing video, and I'll get onto that ASAP. But it's important for you to make sure that you understand that there is two different ways that you can invest into the stock market. This is a mistake that so many beginners make, and I made myself, where you put your money into your favorite companies that you're maybe using, and then you realize that you don't have the time to, research what's going on with the company when it comes to the financials, and now you've lost your money. And to give you an example of what I'm talking about, PayPal has always been a company that I've used for the past 10, 12 years with all of my different online businesses. And it's a company that I thought was going to do well, year after year after year. So I put a decent amount of money into it, and as you can see, in 2021, the stock price has crashed and it hasn't recovered ever since. So it's a good thing that I took my money out in time, otherwise I would have made a massive loss. And this is the same thing with another company that I've used, which is Alibaba. As we can see with this one, it's the exact same thing. It was doing really well in 2020. I put a decent amount of money into it. And luckily I was able to catch the news and see that, something was happening with the company or its founder. I can't remember exactly what happened, and the stock price crashed. And same thing with this one, it hasn't recovered since as well. So my advice to any beginner out there is to focus on index funds because, these tend to do well. Maybe you might not make the most money, but you're not going to lose massive amounts of money if the price dips. But moving on to step number 4, which is that once you've decided on, how you want to invest, whether into individual companies, index funds, is that you need to know how to pick the best investment app. And the way that you can figure out what's the best investment app is to, number 1, do research on which apps are accepted in your country. Second to that, you want to pick an app that, has the capabilities of being able to offer a service that's going to be beneficial and it's going to make things a lot easier for you. You don't want to find an app that's complicated. You don't want to use a broker that's going to charge you high fees. You need to make sure that you research all of these details. And you also want to make sure that the app is going to protect your money. The apps that I use and the apps that I recommend on this channel is going to be either Trading 212. At the time of me recording this video, I believe that they mainly operate in the UK or for United Kingdom customers. Trading 212 is decent. I've used it for the past 10 years. I've not had any issues with it. I've been able to grow various different portfolios with it, and I've been able to withdraw my money as well. You can also check out Invest Engine. Invest Engine is another one that I use, and I mainly use it when it comes to building up investment portfolios for my registered businesses. So if you've got a registered business and you've got money sitting in a business bank account, but you want to put it to work, then you can check out Invest Engine. You can also register for an Invest Engine account as a personal individual as well. And if you're based in the United States, maybe Canada, Australia, you can check out Moomoo. Moomoo is really good. Your money's protected up to $250,000, I believe. And you're going to be able to buy into all of these different index funds. And they also offer massive bonuses when you sign up as well. So I'm going to leave links to all of these different investment apps in my description down below. And I've got another video coming out real soon where I'm going to break down exactly how to use all of these different investment apps. So be sure to subscribe, hit the bell notification so that you don't miss that video. But whichever investment app that you decide to use, once you pick whichever one is perfect for you, step number 5 is that I would advise that you use a strategy called dollar cost averaging. And all this means is that you're going to be buying into your chosen investment, whether index funds or individual companies, on a consistent, regular basis. So for example, let's say if you had $10,000 to invest, I wouldn't really advise to put all of it in there straight away. Of course, you can do that if you want, but it might be better for you to invest, let's say, a small portion of that a few times a week. Or what you could do is put the $10,000 in there, but for you to be able to see the long-term benefit of seeing your money grow over time, you want to make sure that you're consistently buying into, let's say, the S&P 500 3 times a week, twice a week, once a week, whatever's suitable for you. Doing it this way, you're going to be able to capitalize from, the low days that the S&P 500 is going to see, and over time, it's going to go higher, it's going to go lower, it's going to go higher. What you don't want to do is try and time the market and, maybe put $10,000 in the S&P 500 today, see that you've made a profit next week, take out all of the money, wait for it to dip, try to put the money back in there. That's going to cause a lot of headache. That's going to cause a lot of stress. The way that I've done it is that I've set up various different automations from my bank accounts into my investment apps. So I don't have to see anything. I don't have to do anything. I don't check to see if I've made a loss. I don't check to see how much money I've made. Everything is done automatically. And the reason why I'm not consistently checking it is because, as I said in this video, you want to have a long-term mindset. By no means is stock market investing a get-rich-quick scheme. It's super important for you to make sure that you're consistent. And this is the final point that I want to end this video on, which is that it's not a get rich quick scheme. You need to make sure that you're consistently buying into it. And you need to make sure that you're doing it not just for today, but you're doing it for the profit that you're going to make 5 years from now, 10 years from now, however long you can keep going. But it's a long-term investment strategy when it comes to being able to make profits and dividends. The money that you're putting into the stock market, you have to kind of forget about it. You're not going to use this money for your regular grocery shopping, your day-to-day expenses. It's a way for you to put your money to work so that in the future, you're going to be able to accomplish financial freedom, and you're going to be able to do that by earning a passive source of income over the years. Now, if you've enjoyed this video, you've gotten any sort of value from it, press the like button. I really appreciate that. Don't forget to subscribe as well, hit the bell notification so that YouTube can let you know when a new video has been released. And if you want to watch a recent YouTube video that I made a couple days back where I break down step by step what you need to do when it comes to investing in cryptocurrencies, and all of the different tips, tricks, and hacks that I've personally used for me to generate multiple tens of thousands of dollars in profit, you're going to be able to check that video out by clicking the link over there. Watch that straight after this because it's already helped out various different people. I've gotten some DMs from you guys that have already been able to benefit from the information in that video, so I'm sure it's going to help you out too. But other than that, guys, I'll catch you in that next video. Make sure you stay safe out there. Peace.